towards a very important acquisition that happened amid all of this volatility in the banking space. Of course, that's Union Bank acquiring the retail assets of Citibank here in the Philippines. Give us your quick opinion on that deal. What is the impact of that deal going to be to the net income in the short term of Union Bank? It's a high margin business. That was what we reported. But as you just mentioned, it's been a low lending rate, a low growth rate environment, specifically for retail. So why is this in any way exciting during this period?
Sure. So we think that the acquisition is positive in the long haul, but the upfront capital impact is also significant, and it comes with near-term integration risk. Like you mentioned, like on the profitability front, product expertise has given the Citi franchise a stronghold in the higher end segment of the consumer, business, and wealth management. And so margins and ROEs are high, and the business has consistently been profitable. So definitely, we think that the acquisition is positive for Union Bank's franchise in the longer term, and it will get a very significant leg up in retail banking. The acquisition will also boost the bank's net interest margin and in turn improve the bank's profitability. But like you mentioned, we are looking at a very low growth rate currently, and so why retail bank acquisition now? I think the negotiation has been ongoing in the past year or so, in the second half of 2021, and so the expectation is actually for the retail momentum to retail asset quality to stabilize, and for the risk appetite within this space to come back again.
Okay, you mentioned in an interview that this could actually raise their credit rating, but also narrow the capital buffer. Specifically, the Tier 1 ratio would be lower. How could that happen? And what would the implication of this be for the businesses and, of course, for the shareholders?
Sure. On the credit side, we think it's actually a little mixed. Like I mentioned earlier, we think the acquisition might be positive in the longer term, but definitely, in the short term, we think the upfront capital is significant. It is a meaningful acquisition for the bank the size of UBP, and the premium to be paid is actually considerable. We are looking at Philippines peso 45 billion, which is close to half of Union Bank's equity capital. So even after the proposed rights issue of peso 40 billion, which will be backed by its key shareholders, including the Arboretis Group, we are looking at a capital impact of roughly around 260 basis points, and this will take its CET1 ratio from 16.1% down to the low to mid 13% area. So the upfront capital is significant, and that will likely result in a relatively thin buffer relative to its country peers. Otherwise, we do believe the acquisition is positive for the Union Bank franchise in the longer term. Now, we also want to touch on certain near-term integration risks that will come with the acquisition. We think it's also important for Union Bank to make sure that the key aspects and product offering, which made the Citi franchise successful in the past, are not lost during the integration process to minimize the attrition of customer being acquired.